Hello and welcome to Crypto Weeklies. Let's have a discussion on Bitcoin forecast as well as yearly returns. None of the content is financial advice. This is the machine learning based price forecast for Bitcoin. We have data since about 2014. This data is available on cryptoweeklies.com under this section. This is the homepage of the website. All of the content available for free. You don't have to sign up or pay for anything. All of the machine learning models are developed in-house. They are not generated using some generative AI or something. It uses Bitcoin price action as well as the Fourier cycle theory and the statistical measures such as bull case at 1 standard deviation, 2 standard deviation, and the base case provided by the machine learning based price forecast. So let's get started. Over the next 6 months, we like to forecast only 6 months at a time. Over the next 6 months, the directionality of the price forecast for the machine learning model is up from 106k to 122k. If Bitcoin does exhibit that 1 standard deviation ceiling bull case, price could be between $111,000 and about 168k. If there is a pullback, the pullback could be between 87k and 100k. Week by week information available on the chart as well as on the table at the bottom of the screen. The base case is this pink line. To its left are the 3 bear cases, to its right are the 3 bull cases. So let's get started with analyzing what this current rally for Bitcoin means over the last year or so. This is Bitcoin in 2024 was up by about 136 to 140% at one point in time. This is in 2025. This is in blue in color. Since the yearly open, the price is about 12% higher than the yearly open. If we look at the last market cycle, with 2021 being the post halving year and 2020 being the halving year, you can see that in the last time, the first 10 to 20 days for Bitcoin, first 8 to 10 days were more positive than in the post halving year, that is in 2021, than in halving year of 2020. This time around, if we compare that 2025 and 2024, again similar story. First 6 days better performance than 2024, but then now a slight dip for the couple of days, and again performing better than in the post halving year than the halving year. If we look at the same similarity again after a dip in the performance, usually the post halving year does tend to have a better second quarter, like towards the end of the first quarter and early second quarter of the post halving year. But over the third quarter, that's when the similarities kind of end. In the fourth quarter of the post halving year, usually there is a price decline rather than a price incline. Again, 2017 being an exception. Again, you can see even in the later half of the quarter 4, there was a huge drop from 1800% to 1200% return. Now let's try to analyze what does it mean for the current bull market. This is the 20-week simple moving average based risk levels for Bitcoin. The key idea where the risk is highest, that is the price has moved too far away from the 20-week moving average. The key idea is that is the highest risk, and again not financial advice, that's a good time to exit the market, whereas whenever the risk levels are low, that's a great time to enter the market. We have been using this metric for almost 1.5 year on this YouTube channel. So if you wanted to stay connected with these kind of metrics, please give us a like and subscribe to stay updated. Last time though, in August of 2024, this metrics did say Bitcoin was in the lowest risk level. Right now the risk levels for Bitcoin are at around the lower half of the high risk, at around 61%. These are in increments of 20%, 0 to 0.2, that is 20% risk, the lowest risk, 20% to 40% low risk, moderate risk between 40 and 60%. Right now we are in high risk, but again crashing towards the low, towards the moderate risk. Again, on Jan 9th of 2025, we were in the moderate risk environment when the price of Bitcoin was less than 100k. If you want to check the current USD price action for Bitcoin, again you can see on January 9th, that's where the price dipped below almost close to 90k, and again on the day of January 13th, that's when the price dipped below 90k as well. In terms of the risk levels at those points, again you can see on Jan 9th as well as Jan 13th, the risk levels were around 50%. Now they are at around 60%. And this also means that although the current bull market is coming coming in hot in the post having years, right now the percent completion as of 20th of Jan is only 45% again. This takes into consideration top 100 cryptos are how they are doing on their risk journey between 0 and 1, high being the not just considering the 20-week simple moving average, but also the volatility, alpha, beta, and risk adjusted return, and the percent drawdown for top 100 cryptos at any point in time. Right now that the risk levels are again at a moderate risk territory at around 50% or so. We did witness slightly elevated risk back in early part of December of 2024 at around 55% risk. That quickly got washed out to now between 46% and 55% risk. Um, the key idea with that being, whenever the risks are sufficiently high, DCing out of the market makes sense, whereas if the risk levels are low, that is in blue color or in green color, DCing in the market makes the most sense. We were not too long ago in that phase again. On Jan 13th of 2025, risks were less than 40%, now at around 44-45% risk in terms of the bull market completion. um, Now let's revisit the current overall sentiment. Again, this is as of yesterday. If we refresh this, it's at around 84% bullish sentiment. Again, these are the narratives over the last 24 hours. Not much bearish narratives. Again, most of them are bullish. In terms of the narrative cloud, again you can see Bitcoin is taking the center stage based on the discussions over the last 7 days on the platforms such as YouTube and X. These are the discussions, and Bitcoin and the bullish sentiment definitely taking the center stage, apart from some meme coins and presidential inauguration as well as reserves related discussion. So with that, I would like to conclude the video with saying that this is the first quarter of the post halving year. Last time around the third or fourth week of January of 2021, there was a dip till about which lasted towards the end of January of 2021, and in early February that's when the rally started from 30k till about 52k. So that is something to watch for in early part of February, and hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Bye bye.